Welcome back, everybody, for my portfolio update for April 2024. And as you guys know, since January, I've made a lot of changes in my portfolio, and some of you out there have had a lot to say about it. In some cases positive, and in other cases not so positive. And by the way, that's a term that I'm going to start using going forward. It's not negative, it's not so positive. But I'm happy to report that my portfolio transformation is pretty much complete, and we're going to go over it and the reasons why in this month's portfolio update. Now, the market in April cooled off a lot, with the S&P 500 being down over 4% and now up just under 7% year to date. But in my own portfolio, 10 of my 12 holdings were down for the month, so I wonder how we did overall. So let's go ahead and get into the details. Now, as of May 1st, my account is currently at $268,272.43. And in the last 1 month, my portfolio balance is down over $5,300. So let's see the breakdown. And if we adjust this to see how we did for April only, we see that my beginning value was $273,778 and some change. I made $800 in net contributions. In terms of my overall investment change, it was negative $6,184.90, which was mostly investment losses of $6,185.35, as well as an amazing 45 cents of account interest. So obviously being down $6,000 for the month isn't ideal, but let's see how we actually performed against the S&P 500. So as you can see for the month, the S&P 500 was down 4.08%, accounting for my timing of contributions, and my portfolio was down 2.26%. So we gained about 1.82% on the index in April, which is a great thing. And if we take a quick look at year-to-date performance for 2024, the S&P 500 is up over 6% at 6.04, and my portfolio was at 4.14%. So we're gaining ground and now within 2% of the index for the year. And just for consistency, let's take a look at the performance of my portfolio since I started it on December 8th, 2022. And we'll remove the annualized returns so we see the full picture. We see that my portfolio was up 21.76% compared to the S&P 500's 30.85%. So since inception, we're trailing the S&P 500 by a little over 9% in terms of total return, but we did make up some ground this month, which is great, and I think with the changes that I made, it'll give me a much better chance to actually catch up going forward. Now, if we take a look at my investment income, specifically for the next 12 months, we see that my annual dividends and interest are at $2,843.92, compared to the $3,528.56 that I had last month, which is a decrease of $684.64. And this is the third month in a row that it's gone down instead of up. But again, it's based on all the changes and repositioning that I've been doing, so it's expected. Overall, my dividend yield for my portfolio has now dropped to about 1%. And while that does seem low, again, it's more about total return and dividend growth than it is about current yield for me. Because remember, I'm looking ahead another 10 to 15 years in the future with this portfolio. So the goal is not to use a dividend income now, but to have it grow for use later on. And with this group of companies, I think the dividend growth is actually going to be pretty amazing over the next decade. But let's actually take a look at what dividends hit my account over the past month. And it's not going to take very long because I had none. That's right, absolutely no dividends for the month of April. And that's because the January, April, July, and October months were my lowest in terms of dividends, and I sold Walmart in January, which was my only stock that was actually paying during those months. But let's go ahead and take a look at what I bought and sold for the month because there's quite a bit of activity there. On April 5th, I sold 175 shares of SCHD at $79.05 a share. On April 8th, I bought 10 shares of NVIDIA at $872.17. And also on April 8th, I bought 14 shares of Lululemon at $361.28 a share. On April 12th, I bought 1 share of Lululemon at $339.09 a share. And then on April 22nd, I sold 50 shares of United Health Group at $497.73 a share. And then also on the 22nd, I bought 10 shares of NVIDIA at $779.06 a share, 15 shares of Lululemon at $355.72 a share, 11 shares of MSCI at $513.17 a share, and 34 shares of Amazon at $178.30 a share. And then lastly, on April 23rd, I bought 1 share of MSCI at $465.71 a share. Now, most of this stuff I've already talked about in my newsletter and in videos throughout the month, but in case you missed those, here's the general recap. In terms of selling SCHD, this was about aligning with my actual goals better, because some of you asked me about it in terms of why are you in SCHD if your goal is to actually beat the S&P 500? Like, shouldn't you be 100% in stocks? And you were right. SCHD is a solid ETF, but its methodology doesn't actually align with my goals, and I'd already been trimming it multiple times, and it was time for me to finally move on. So I did. Now, I've mentioned this multiple times, but if SCHD's methodology about focusing on quality dividend yield happens to fit your goals, then obviously you should keep it. Like, there's more than one way to invest. We all have to do what makes sense for us, and for me personally, it's just that with my goal of trying to beat the market, the longer that I held on to SCHD, the less sense that it made because it's not really designed to do that. So I finally sold it. Now, in terms of United Health, I wrote a very long explanation of my thoughts on UNH in my newsletter a couple weeks back. But basically, the bottom line is this. I think UNH is the best managed healthcare stock there is out there, but I don't want to be invested in the U.S. healthcare system because I have a lot of concerns with it. It's an extremely complex yet low-margin business. It's highly political and almost universally hated by consumers or users. Their costs are rising, and their ability to keep raising premiums is going to be heavily scrutinized. And just in general, the health of Americans is slowly deteriorating over time, which I think is going to put pressure on the frequency and costs of medical care going forward. And then lastly, it's just not a business that I feel like I understand very well. But United Health is one of those where, again, if you're holding UNH and you like the company, then keep it. Almost every analyst has it rated as a buy, and it'll probably do great just like it has over the past 10, 20, or 30 years. But for me, I didn't have the confidence in it, so I chose to put that money into other stocks that I have more conviction in. And this is something that I don't think we talk about enough. Like, everybody wants to argue about every single stock and whether you're right about it or you're wrong about it. But one of the best things about being a retail investor is we don't have to invest in anything that we don't want to. Just because something may be a good company for someone else doesn't mean that you have to find every good company. You just have to find enough of them in the things that you're confident in to make a difference in your portfolio. So if you have a company that you don't understand well and you don't feel comfortable investing in it, then don't. There's nothing wrong with that. Like, move on to things that you're more comfortable with, and that really shouldn't be all that controversial, but for some reason it seems like it is. And so just to wrap up, after selling SCHD and UNH, I added mostly to existing positions that I wanted a higher allocation to, as well as adding Lululemon as the only new stock into my portfolio. And I actually already talked about why I added Lulu in a video a couple of weeks back. So if you missed it, go ahead and check that out for more info. And I mentioned earlier that my transformation of my portfolio is now complete. And since the beginning of the year, I've moved on from Walmart, Hershey, SCHD, and now United Health Group. And while on the surface, it looks like I'm trying to get in and out of a lot of stocks all the time, it was really for fundamental reasons. Walmart's projected revenue growth is less than 5%, and their projected cash flow growth is less than 7%. Hershey's projected revenue growth is less than 5%, and their projected cash flow growth is around 2%. SCHD is an ETF that focuses on quality dividend yield, which doesn't really match up with my actual criteria. And so when you match those three up against my goal to actually beat the S&P 500, it was going to be very difficult to do so because that's not really what they're made to do. And then for United Health Group, while it has projected revenue and cash flow growth that's greater than 9%, it had one of the lowest profit margins in my whole portfolio. And it's in an industry that I just don't understand and don't feel comfortable investing in. And so none of those decisions were just based on like technicals or just random. They were based with my actual strategy and goals in mind. And I think people are going to be surprised at how little my portfolio is going to change going forward compared to how much it's changed over the past few months. So with that in mind, let's take a look at my updated portfolio allocation. And I have a new number one holding in terms of weight, and that stock is Nvidia at 12.88%. McDonald's is second at 12.72%, Amazon at number 3 with 12.26%, and then Visa is next at 12.02%. And those four companies make up almost 50% of my portfolio, which is pretty crazy. Apple is now fifth at 9.9%, and then Valero at 8.94%. Amex is now at 8.72%. Google is just over 6%. Caterpillar dropped down a bit, so it's a little under 5%. Lululemon is new to the portfolio and it's at 4.03%. Starbucks is at 3.79%. And then lastly, MSCI is at 3.65%. And as you can tell, it's all individual stocks now since I got rid of SCHD. No more ETFs, 100% individual stocks, and we'll see how we do. And then if we take a look at which holdings have performed the best overall, and remember, this is just price return since I take my dividends in cash to reinvest manually. American Express just keeps going up and is at over a 53% gain. Valero has cooled off a bit and is now at 36%. Caterpillar is another one that's come down finally, a little bit at least, but they're still over 35% gain. Google has shot up over 14% after a good month. Visa is at just under 10%. Amazon is at over 8%, and this is mostly due to the fact that I've kept adding to it at higher prices. Otherwise, the number would be higher based on my original buy. McDonald's is at 1.33%. Lulu's just been around for a couple weeks, but they're at just under 1% at 0.79. Nvidia is one that I've added to multiple times this month, and even with my buy around $8.97, my overall holding is about flat at 0.27%. And then for my three negative holdings, you have Starbucks, which for now is at negative 5.25%, but they announced earnings and were down over 12% after hours, and that's not actually accounted for here. That's going to show up starting tomorrow. So that one's going to get a lot worse. Apple's at a negative 8.64%, and then MSCI, which got crushed after earnings, is at negative 13.43%. Now, if we take a look at just the last month, you can see as of May 1st, Google was one of my only good performers at 7.85%. American Express with another respectable month at 2.78% gain, and then the other 10 holdings were all negative, which is pretty crazy. Apple was just barely at 0.67%. Amazon was down 2.98%. McDonald's down 3.16%. Starbucks 3.17%. And then Visa down 3.75%. And while all that sounds pretty bad, those were actually companies that were still slightly better than the S&P 500, even though they were negative, since the S&P was actually down 4.27% for the month. But unfortunately, now the list goes on. Nvidia was down 4.38%, but luckily for me, I bought some when it was really down in the 700s, and it's come up substantially from then. Valero was down 6.34%, Lululemon down 7.69%, but again, I bought at a better entry than it started for the month, so my position is slightly up. Caterpillar was down 8.69% for the month, ending a really great 6-month run for the stock. And then finally, of course, MSCI, which went down 14% or so after earnings, was down over 16% for the month. And when you see those numbers, you wouldn't expect that I actually outpaced the index by almost 2 percentage points this month, but I had some really good entries on stocks that were really down for the month overall, and I had stocks like Google, Amex, and even Apple kind of carry the portfolio, at least for this month. So as promised, let's look at the top 4 stocks for 2024 and see how they're doing. And as we see, my top 4 stocks have still performed relatively well. Valero and Caterpillar have still easily outpaced the S&P 500 so far this year. Visa was outperforming early on, but still struggling this month and now trailing the S&P by about 2.5%. And then Hershey has rebounded a little bit, having a better April than the broader market did. And they came back to within 1.5% of the market return. But again, I sold out of my position in Hershey on February 12th of this year. So if we take a look at their performance versus the S&P 500 before and after that, before it was pretty close to the market return. And after, we see that this last run-up for Hershey has really brought it back versus the market. So it'll be interesting to see how they do with earnings coming up. So let's take a look ahead to next month and what holdings I think I'm going to add to going forward. In terms of ones I'd like to be higher as it relates to weight, I'm honestly good with the weights as they are today, because over the last month, I've been aggressively adding to the companies I wanted a higher allocation to, like Amazon and Nvidia and Lululemon and MSCI, that where my portfolio is at today, I'm actually pretty good with. In terms of ones I think are the best value right now, I would probably say Google, Lululemon, and MSCI. And so what I expect to happen over the next month or so is incremental adds to existing positions, continuing to research new opportunities, especially due to earnings season swings, and doing a better job of documenting how and what I'm monitoring for each of my stocks. I talked in my newsletter this week about being willing to reevaluate our goals and how our portfolio was doing against them, and that's really what I did at the end of last year. And when I look at the companies that I'm holding now, I really feel good about the chance that I'm actually giving myself an opportunity to hit my goals where I don't really think I did last year. And like we do each month, let's review what that actually is, and I've added a slight tweak to it. My goal is to beat the S&P 500 in total return while creating a growing passive income stream for my family. My strategy to achieve it is I want to attach myself to companies with wide moats that are generating increasing cash flow and rewarding shareholders with dividend growth that outpaces inflation, or share buybacks that increase their ownership stake in the business. And obviously that last part about share buybacks is new, but share buybacks also reward shareholders just like dividends do, and it was something that I was evaluating, but it just wasn't actually called out in my strategy. So if I recap what happened this month, the portfolio was down, but we outpaced the S&P 500 by 1.82%. Annual dividends decreased for the third month in a row, but again, it was by design, and 2 of my top 4 picks for 2024 are still outpacing the market, and the other 2 are pretty close behind. So overall, the performance of my portfolio has been pretty good, and we're starting to gain back some ground on the S&P 500. And with the big earnings calls for large holdings like Nvidia and Apple coming up in May, we'll see how the portfolio continues to hold up over time. So how did you guys end up for April? The market was down, but hopefully you saw some green or were able to add to some quality positions over the month. But let me know down in the comments below. Now, if you want to see more details of why I added Lululemon to my portfolio, it was actually part of my Amazon shareholder letter video, and you can watch that by clicking on this right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.